Good morning, good evening to everyone around the world who's chiming in for the coffee hour. We had such a great day today. It is such a sigh of relief, especially with all the news coming out about well, we should be hitting some deals here soon. All right, there's some deals, some news about deals coming out. So hopefully that will reflect very positively on the stock market. We had some earnings today for Tesla, so we'll be covering that. And then Bitcoin has been on an absolute tear these last 2 days, it seems. So we'll be covering that as well. And, I'm going to kind of lead into why I think that is. Because there was some news that was just a headline. It wasn't even big news. It was just a headline. It seems like everything was focused on this whole Trump Powell thing, and people completely missed this tiny little headline that came out about relating to Bitcoin. So we're gonna explore that. I'm gonna be talking about a portfolio update. I'm gonna be talking about kind of everything that I've been doing. And I cut myself yesterday while I was hanging out, so my hand is like still hurting. But anyways, we're gonna go over the portfolio, and I'm gonna be kind of just explaining some moves and some buys that I did have. For Discord members, you guys already know kind of the moves I made. So I'm gonna just kind of elaborate a little more deeply on why I made those moves. I did cover it in yesterday's stream, but I didn't cover it enough. I didn't cover it deep enough. I did get some comments that, people are asking, hey, are you like not bullish anymore on Palantir? Like, are you getting out of Palantir? What, why? So I'll just put it out right now that I am still very, very bullish on Palantir. I don't think that nothing, like, there's so much prospects for that company. There's so many more prospects. That company has so much room to grow. So at least in my opinion, right? I have nothing backing this up other than the slew of good news for Palantir. You still have that NATO contract, which I think people don't realize how much of a big deal it was. Remember, back, not too long ago, I want to say about a month ago now, Palantir was mostly US based. And then little by little, they started branching out. They started doing financial services. They started doing healthcare. They started doing logistics. And now they're breaching into the European market. They're helping one of the prominent financial firms out there, or a couple of prominent financial firms out there, with artificial intelligence and basically putting together all their data. And I still think people don't realize how big of a deal that was. And now it led to NATO, them being used by NATO. So again, I really think that Palantir has a lot more room to grow. And not only that, you still have other militaries out there that are allied to the United States. And I really think that these other militaries will start adopting Palantir as well into the future. Again, I have nothing backing that up. It's purely speculation, but I think Palantir has a lot of room to grow. So anyways, we're going to get into all of that and more. So let's strap in and, let me just get this quick sip of coffee. Reading through all the news, I had to double the dose for my caffeine intake today because, last night I kept waking up to check the markets, and just, it wasn't a good time. Anyways. All right, guys, let's get into this. And I do have a poll out there. All right. Appreciate you guys for answering that. All right, so let's get into it, guys. Welcome back, Alex. Welcome back, G-Bro. Always great to have you guys. All right, let's go. All right, so this is the portfolio as it stands today. Again, no major change from yesterday, other than the I guess big swing we had in the markets, and we're going to continue having, hopefully, for the remainder of this week. But I don't know. I'm still a little shaky about it. So I am still down about $70,000 from the entire portfolio value. A bulk of that, about half of that actually, is going to be due to VGT and the M1 Finance portfolio. VGT is a tech focused ETF for the technology sector from Vanguard, and then the cover call ETFs. I have xdte, xpay. Those are still hammered because they follow, the S&P 500. So those are still hammered. So all in all, and plus Nvidia had a major dump. So all in all, I'm still down about, $70,000. Is what it is. Not too worried about it, especially, if these are going to be very, very long-term holds. Again, I'm not that that worried about the at least the M1 finance portfolio. All right. For the covered call stack, whatever you want to call it, that's hosted on Robinhood, I'm a little more weary about that one, only because of the margin amount that is being used on that portfolio. So that is, kind of leading me to what I'll talk about a little later in regards to PLTW from Roundhill. All right, so real quick, let's look at fear and greed. We're at 24. We were hovering around 18 the other day, and it looks like we jumped back up to above 20. So it looks like the market is starting to feel a little better. Might be getting a little more clarity, but again, the huge sell-off we had was due to, some commentary made by the president, right? Due to the commentary made by the president about Jerome Powell and him wanting to get him fired. And, not only that, but the administration was actually looking at getting rid of him. Just real fast, it looks like futures is up. All right. So we're so far after the market closed, pre-market, aftermarket, whatever you want to call it, we're still in the green. So if this holds and holds until, about 5 a.m. Eastern Standard Time, we should have another great green day, which is, always a beautiful thing, right? I'm not going to lie. Now look at this. Retirement in Thailand. Look at that. A little hint for some of you guys. But anyways, I'm still very wary about the markets, especially right now. We seem to be swinging just up and down, left and right, through 2%, 3%, 1.5%, etc. But the biggest thing, I posted a video in the Discord for this analyst. I can't remember his name at this moment, but there was that analyst or not analyst, but a finance pundit, we'll call him that. He did give, some very good insight. He was talking about the markets are going to be choppy over these next, basically until the fall. That was his prediction. He's saying that the markets are going to be really choppy, and just continuing to read more and look at other finance pundits kind of insights. People, there was a great one by Solomon, who runs Goldman Sachs, and he basically was saying that yes, the 90-day tariff pause was great, but there's still a huge high level of uncertainty. And right now, the whole market, from all these major institutions, all these big banks and things right now, they're basically calling a true recession, a coin flip at this time, right? It is basically a coin flip. That's how close we are to a real recession happening. And, just taking all that into account, just a data point, it doesn't mean sell out of everything right now and flock to gold. But, just taking that as a data point, it's going to help you plan for the future, right? It's going to help you look at your portfolio and see where you might need to shape up a bit or need to change your strategy or need to adjust, right? Again, you're not going to sell out of everything all at once just because, I think it's David Solomon who runs Goldman Sachs, just because he said, hey, we're heading into a recession. You're not going to just change everything on a whim. But, again, because it is a coin flip, the possibility of a true recession as a coin flip, nothing makes sense right now. The dollar is heading down. Gold is trending up. Bitcoin is going up when it was, seemed to be trading 1-for-1 with the markets. We're having wild market swings. People thought, as people exited equities, they would flock to treasuries and bonds. That actually didn't happen. So nothing right now makes any sense. And that right there is creating a huge amount of uncertainty in the market. So again, going back to the original pundits kind of point, it's going to be choppy over these next couple of months. And again, we kind of already spoke about this on this channel. We've talked about this on this channel plenty of times, especially when it comes to tariff talks. We don't know what we don't know. So we don't know how this is going to end up. We could just take it news by news, right? Whenever the White House releases some type of press release, or if Scott Bessent, Secretary of Commerce Howard Lutnick, or DJT is releasing something either on Truth Social or a news article or something, we have to just read that stuff, because the markets are going to react to everything that these three guys talk about, right? Because they're the ones handling all the trade. So I just wanted to at least cover that piece. Yeah, is it David? Oh, it is David Solomon. Oh, okay. Fun fact, James. He's also a music producer. Awesome. Okay. Is it David Solomon? I forget his first name. I think it is David Solomon. That's the Goldman Sachs CEO. All right. So moving on, this was the big news that caused the sell-off, right? This was the big news. Trump saying that he wants to get basically the Fed Chair Powell fired, get rid of him, and then install him with basically a Trump loyalist, right? That was the whole narrative. And now it seems like he's flipped. It seems like Donald Trump has flipped that narrative and says, "Oh no, I didn't really want to get him fired. Like, no, that was never the plan, guys. Calm down, all right?" I really think it's because the market was taking such a nosedive on that news, didn't react the way he thought, and now he knows. Now he knows he cannot touch Powell or he's going to cause a huge market rift. So President Donald Trump said he has no intention of firing the Federal Reserve Chairman Jerome Powell before his term leading to the U.S. Central Bank expiring next year, right? Powell has said, and he's on record for saying, that he has no intention of quitting between now and when his term ends. And he's going to continue keeping politics out of the Fed, away from monetary policy as much as possible, right? So I like Jerome Powell. I see both sides of the camp. One camp wants him ousted, get him out, that he's going to put us into a recession and then he will react, right? But I also like that he's kind of staying the course and just remaining as level-headed as possible based on the data that's available to him. So I admire that kind of approach. I really do. But I also do see that, if we end up in a recession and then the Fed, reacts, it'll probably be too late at that point. So I do see both camps. In my opinion, of course, everyone has their own opinion, but it's just my opinion. Trump has recently ramped up his rhetoric against Powell and declined to rule out the possibility of taking an unprecedented step of firing him. So his administration had approached the Supreme Court about getting rid of or looking for ways to basically replace Jerome Powell. So this is not just, talk, right? This wasn't just talk. They actually were finding ways, lawful ways to get rid of them, and not too long ago, there was a couple firings that did happen where the Trump administration did go to the Supreme Court and ask how they can get rid of these Biden elected officials, and not Biden elected, Biden placed officials, I suppose, and they ended up getting rid of them. So, I knew that was going to be the precedent for them to start looking at how they can get rid of Jerome Powell. So that came out, and you guys know the rest of the story. Basically, the market did not like that, and the market tanked, when he kept talking about, I can't wait for, or his firing can't come fast enough, or the end of his term can't come fast enough, whatever it was. So President Donald Trump on Tuesday said he has no intention of firing the Federal Reserve Chair Jerome Powell before his term. None whatsoever, Trump said in the Oval Office when asked to clarify that he did not seek Powell's removal. He never did. Trump is, I tell you, you guys know this as well as I do, that Trump flip-flops like crazy. Like he could, just like when he was talking about Zelensky at one point, not to bring, this whole, war in Ukraine thing up, but just like when it was about Zelensky, he was like, oh no, he's a dictator. His approval ratings are low. He needs to be removed as a president. He needs to hold elections. Right. And then like about 2 or 3 days later, reporters asked him, so what do you think about Zelensky? Oh, he's a great guy. I don't remember saying those things, like it's crazy. It's comical every time he says it. And it's like, recently in the White House, when he was meeting with the Italian Prime Minister, a reporter had asked him, basically, can you explain your remarks on the whole parasite thing? Because I guess he had referred to Europeans or the EU as parasites. And he was like, oh, I never said, I have no recollection of that. Like, and even the Italian Prime Minister was laughing because everybody knows that this dude will just flip on a dime. Like, it's crazy. Like, this is our president, guys. Anyways, White House economic advisor Kevin Hassett had also said that Friday that Trump and his aides were actively studying the possibility of firing Powell. So again, his administration was looking for ways, legal ways to remove Powell. They can't just fire him. Powell, whom Trump appointed during his first term as president, is set to serve as Fed chair until May 2026. He has flatly stated that the president cannot simply remove him under law. All right, so that was the cause of the big sell-off. We guys, we kind of already knew that, but now it looks like the narrative has changed. And oh no, I never meant it that way. Guys, I was just kidding. LOL, not a big deal. So this is one of the bigger pieces of news, I think, of why Bitcoin is rising and the cause for Bitcoin spike. All right. Paul Atkins sworn in as U.S. SEC chair. All right. This just happened and there's almost no real news on this thing, right? No real news, but this is a big freaking piece, right? This is a big piece, especially for the stock market. Paul Atkins, and especially for crypto. Paul Atkins, who previously served as a U.S. Securities and Exchange Commissioner member from 2002 to 2008, was seen as a business-friendly lawyer, was sworn in on Monday as the SEC chairman, and I believe 2002 to 2008. Well, actually, I'll take that back. Let me take that back. Anyways. So who is Paul Atkins, right? So who's this guy? He's being sworn in as the SEC chair. Why would this be such a big deal? Okay, well, simply, Paul Atkins is known for advocating reduced regulatory burdens and promoting financial innovation, i.e. crypto, right? Cryptocurrency. Atkins has been a vocal supporter of free market principles and regulatory policy. So I wouldn't be surprised if more scams are going to come out from the crypto space, because the SEC was clamping down on a lot of that. But now, with Paul Atkins behind the wheel, I suspect there will probably be a lot more scams coming out. The whole stuff with Haley Welch, that was dropped. When people or these celebrities rug pull their audience or their fans, the SEC is probably not going to go after these people, right? So they'll be able to get away free and clear. And, it is what it is. So Atkins was co-chair of the Token Alliance, a cryptocurrency advocacy group for the Chamber of Digital Commerce. And for those who don't know, because I didn't know this, the Digital Chamber, formerly the Chamber of Digital Commerce, is an American advocacy group that promotes the emerging industry behind blockchain technology, Bitcoin, digital currency, and digital assets. All right, so Paul Atkins, very tied in to the crypto space. And this was kind of the news that I think crypto enthusiasts were waiting on. Like, what is the deregulation piece that Trump promised? And this guy, Paul Atkins, I think is going to be that pivotal piece to deregulate crypto. And obviously it's having an effect because Bitcoin is, I think it's the reason why Bitcoin is climbing so high. So Paul Atkins, he worked at Potomac Global Partners. All right. So he worked in this kind of like industry. Basically, this is a advisory group that focused not just on, equities and investment and stuff like that, but also cryptocurrency and digital assets. All right. So this is Potomac Global Partners. This is where Paul Atkins came from. So now he's obviously the SEC. Whoa. Now, obviously, he's the chairman for the SEC. So again, this guy is very tied in. We talked about him like once, many moons ago about his kind of stance on cryptocurrency, and it's just been quiet ever since. But now with him heading into the office and running the SEC, the Securities Exchange Commission, I think this is going to be a huge tailwind for crypto in general, and definitely for Bitcoin, which leads me into another piece, which I'll cover here in a moment, relating to Michael Saylor. Anyways, yeah, you guys, like, if we click this link, it's no longer there. So don't even worry about it. But Mr. Atkins led client work for financial services firms regarding an array of matters, including domestic financial services, regulatory issues, and then, I'm sure cryptocurrencies is in there. So just wanted to at least show you guys who this guy is, why he's so important. And I think that is what is really leading Bitcoin and cryptocurrencies to rise. All right. U.S. pushes India for full access to commerce. For e-commerce market access for trade deal. Again, this whole tariff war is to create new agreements. So now that we're, moving into trade agreements, negotiations, things like that, India looks like they want to allow Walmart and Amazon into their markets, or we're pushing for that, right? Because traditionally it looks like Amazon had to work through basically partnerships in these local markets like India. They had to work through another company that was probably just a straight up Indian company in order to resell their products or services. But now it looks like Amazon can sell directly to the consumer, or that's what they're pushing for, right? So that would be a good tailwind for Amazon and for companies like Walmart or major retailers. As a matter of fact, Donald Trump just had a meeting with a lot of CEOs, a lot of retail CEOs, Walmart, I think Home Depot was in there, Costco was in there, a couple other CEOs were in there. So he just had a meeting with these guys, and I think they didn't really broadcast what that meeting was about, but I think that meeting is more or less him calming them down and saying, hey guys, this is what's on the horizon. So I think it's kind of like a hush hush type of deal. Wealthy Life, what's up? Hey, welcome. All comes down to energy and batteries. Yep. So India is attempting to negotiate a deal with the United States to avoid tariffs after the 90-day pause expires. Again, this is just more positive news. This is the news we're looking for, right? We're looking for the major trade partners to come to the table, negotiate good deals with the United States, and hopefully in 90 days, well, now I don't even know how many days we have left, but hopefully within the 90 days, a lot of negotiations have been made, a lot of new trade agreements are out, and, stock market will reflect positively for that. And not only that, there will be a lot more clarity, which will help avoid a recession, because that is the word of the day right now across pretty much the finance world, right? Across finance news everywhere is recession, recession, recession. So as we get more clarity, as more positive news comes out about trades, and trade deals and trade agreements, then that will bring clarity to a lot of companies in the United States, so they can forecast and they can provide better guidance for the way ahead for their basically their shareholders. So really good stuff here. Doge. So shout out to everyone who's holding Tesla. All right, Wealthy Life, I know that's you. Doge work is mostly done, and beginning in May, my time allocated to Doge will drop significantly, said Tesla CEO Elon Musk. All right, so this was seen as a huge win for Tesla shareholders, and the shares reflected as such, even though they missed earnings completely. So now they're trying to source new batteries. They're trying to source the components they need locally or domestically in the United States. They're trying not to rely on China, especially with this whole tariff stuff. So I think, Elon Musk mentioning this and being specific about this, I think, he knows something we don't, that tariffs are probably going to remain with China, probably a little more elevated than other countries. They're definitely going to come down from what they are currently, because 145% tariffs is not sustainable for anybody. So I think that obviously the tariffs are going to come down for sure. But Elon Musk definitely knows something we don't. I don't know. He's a smart guy. For him to say that, they don't want to rely on Chinese batteries, Chinese components anymore for building Tesla cars, and they want to remain or they want to source all those parts domestically. Again, that's just telling me something, right? It just makes you go, I don't know if there's a huge decoupling coming on, from China, like China's decoupling from the United States. I mean, you have two of the biggest economies in the world, basically leaning on each other. You have a consumerist economy, i.e. the United States, where we just consume. That's all we do. And then you have a producer nation like China, where, they manufacture everything, right? They manufacture textiles and all that stuff. We manufacture, in my opinion, the bigger ticket items, or we're trying to manufacture the bigger ticket items, things like technology, things like pharmaceuticals, those are the things that we really care about. Everything else, like t-shirt, textiles, I don't think we really care about that too much. to be perfectly honest and perfectly blunt, like we're not trying to bring t-shirt factories to the United States. I think really what we're trying to bring are the major players, the TSMCs of the world, the major technology companies, the major pharmaceutical companies. We're trying to bring them into the United States. We're basically trying to corner the market in case something happens in the future, i.e. a conflict, then there's maximum leverage against countries like China or countries like Russia, right? We could basically say, you better knock it off or we're going to cut you off from trade. So I think this is a bigger long-term play for the United States. And again, for the stock market as investors, this is going to be a big deal, huge deal, right? It's just, we have to weather the volatility now. We have to deal with the ups and downs. We have to just survive until these 90 days are over, and definitely until the beginning of 2026. So as for supply chain risks, especially sourcing battery components from China's CATL and BYD, the company Tesla is taking steps to localize component sourcing, as this makes sense for Tesla from a cost and logistics standpoint. To mitigate any negative impacts from Tesla or from tariffs, Tesla is regionalizing its part supply chain and currently operates the largest lithium refinery outside of China in South Texas. That's actually new. I didn't know that. I didn't know that they're operating a lithium refinery. That's interesting. So anyways, lithium, extremely important, right? For batteries, for battery technology. As a matter of fact, just a fun fact, Afghanistan sits on one of the largest lithium deposits in the world. There was a lot of talk of when the United States was in Afghanistan that we were going to start mining the lithium, that the whole point was, to basically get those minerals. But no, that didn't happen because it would look very badly on the United States from a kind of PR point of view, right? But who went in and started mining a lot of this stuff in Afghanistan? There's a lot of deals done with China. All right. Again, not a whole lot of information on that, but I can tell you from firsthand experience that was what was happening, that China was, getting that lithium from Afghanistan. So again, just a fun fact. So moving on, semiconductors doing really good. Again, a lot of you guys know that I'm in cepi from yieldmax. That is a yieldmax semiconductor income ETF. So this was excellent news to hear coming out. Virtually all semiconductor stocks closed higher on Tuesday after it was revealed by the U.S. Secretary of Treasury Scott Bessent in a closed-door event, investor summit, that he expects a tariff turmoil with China will de-escalate as the situation is unsustainable. So hearing that again, from Scott Bessent is just good news. It's good news. It's good news. He's not explaining explicitly what's happening, right? At least according to this article, he's not doing that. But just having the narrative, having the words, having that rhetoric being said by the Secretary of Treasury is a big deal, right? And it was enough to send semiconductor stocks up. So hopefully, again, we hear some better news over the coming weeks between China and the United States, and that tariffs come down, trade agreements are being reached, but it looks like China is still not backing down. They're looking for partners outside of the United States to basically, dump their goods in, right? So there's always this talk of polarization, especially in the global world. There's always this talk of polarization. You're going to have kind of the Asia polarization. You're going to have the Western polarization. Then you're going to have the, European polarization. So it's interesting to see that this is playing out in real time. So China is looking for new trade partners. They're trying to strike new deals, and they will punish anybody, any country that does a deal with the United States that basically comes to the detriment of China, to, their economy, their trade agreements and things like that. So that is just really interesting because they, in my opinion, they do a lot of shady stuff. If any of you guys ever read the book, Diaries of an Economic Hitman, basically they turned a lot of countries through their, One Belt or whatever, that Silk Road Initiative, I think is what it's called. They basically turned a lot of countries into debt nations, right? Into slave nations, right? They owe so much money to China, and China knew they were never going to pay it off. So now they can use that debt against those countries to further Chinese interests. And it's a fantastic play. And the United States has done this before as well. But I think Chinese, the Chinese government was able to expand their influence further, which obviously rattled a lot of, people in the United States government. So now this trade war, I think, is a product of all of that. So you guys heard me already talk about, the United States trying to maintain their dominance in the world, and this trade war is a result of that. And unfortunately, trade wars are very costly, and they're emotionally driven, so stocks have to sell off every now and again. Real quick news for Huawei. Just checking the time real quick. Okay, so China's Huawei is set for mass shipment of new AI chips amid NVIDIA's H20 woes. All right, so you guys know that NVIDIA, they cannot ship anything to China right now without a license, without an export license, right? And apparently they knew this as of like April 8th or 9th, and they didn't reveal it up until about, a couple of days ago. So this was obviously a kick in the back for NVIDIA, and their shares reflected, right? They had a huge drop. And now Huawei's coming out and saying, hey, we got a lot of chips here. Huawei's a Chinese-based company. They're one of the competitors to NVIDIA for market share. So you have Huawei, and I believe you have Tencent out there. But Huawei is saying that they have chips that can compete with NVIDIA's H100 chips, right? And the H100 came out in 2023, and they're saying that their chips can compete with those. So don't even buy NVIDIA chips. But I don't know how true that is. Again, I don't believe anything that comes out of these Chinese companies, because again, they're so tied to the Chinese government that they may fabricate some information. I know people, I know there's a sect of people out there that will say, like that's a bad way of thinking. But again, I have not seen anything that would prove me otherwise, right? And Huawei, again, a lot of their hardware has some type of technology in it that basically keylogs everything and sends it to the Chinese government. So if you have a cell phone made by Huawei, if you have a router made by Huawei, a switch, a Wi-Fi NIC card, a keyboard, like anything by Huawei, that stuff is wired to send data to the Chinese government. So again, I don't believe anything that comes out of China. But anyways, Huawei Technology intends to start mass shipments of its advanced 9010C AI chips to Chinese customers as early as next month. Reuters reported, citing people with knowledge of the matter. The report comes on the heels of new U.S. curbs requiring NVIDIA to get a license to export the company's H20 chips to China, a change that could result in a $5.5 billion impact to the U.S. company. Last year in August, it was reported that Chinese internet companies and telecom operators have been testing Huawei's new chip, known as Ascend 9010 Charlie. Huawei reportedly told potential clients that the new chip was comparable to the NVIDIA's H100, which was unveiled in 2023. So, and it's just my opinion, all right? It's just, I have nothing backing this up. But as new trade agreements start coming out of the woodwork, I think we're going to see other countries start buying more chips from NVIDIA. Right? That's just a thought. It's just an idea. It's kind of a hypothesis, or what was that? Yeah, hypothesis. I think more as these trade agreements start coming out, like we saw with this India trade deal. There was a line down here. New Delhi, which aims to reach two-way trade of $500 billion with the United States by 2030, promised to purchase more U.S. oil, gas, military gear, and combat illegal immigration. So the military gear, I think, is going to be wrapped in with the Palantirs and with probably the NVIDIAs, to be honest, because they're going to want to have a stockpile of AI compliant chips, I guess, AI compliant hardware in their arsenal, right? Especially if conflicts continue to rise. So it's just a thought. It's just a hypothesis. I have nothing to back it up, but I really think NVIDIA is going to start selling to these other countries, and they're going to kind of start shying away from China. China is one of their biggest customers, but it's not their only customer. The United States obviously purchases a lot. You have the European Union that's going to start making up, probably a bulk of that too, I think, with future trade agreements and things like that. So again, it's just a thought. It's a hunch. I have nothing to back that up. Magnificent 7 stock, this is just a data point, but the Mag 7 is lagging the S&P 500, for pretty much all of 2025. So we always talk about how the Mag 7 is basically kind of a dying breed at this point. And it's not that their share price is going to go down or into the toilet, right? It's just that they're probably going to have muted growth over these next couple of years, right? They're probably going to trade flat. We've been used to seeing them just, 50, 60, 70, 80%, year over year growth, right? I think that is no longer going to be the case. There's been a lot of chatter out there for months now about, hitting stagflation. Anything with high exposure to Mag 7 is going to trade flat. So there's been a lot of talk of all these new index funds coming out that are equal weighted, and equal weighting it's not a new thing. It's been around for a while, but there's more and more talk about investors adding equal weighted ETFs to their portfolio. There was a really some brand new one that came out and it made its waves already. But it was a 3% weighting to basically all S&P 500 companies. So I don't know. Expect that to be a thing. Expect to see that more and more as time goes on. Again, just my thoughts. So Michael Saylor again's in the news. Our boy Mike purchasing up the Bitcoins like they're going out of style. Strategy buys $555 million worth of Bitcoin, increases total stash to 538,000 Bitcoins. All right, basically still half. A little more than half than what Satoshi, either the person or the group own in terms of Bitcoin, right? This is absolutely wild. He's continuing to buy. He's a madman. He's who knows what's going to happen, right? But I just wanted to point that out, that he's still buying. And I want to also report on this. All right, this was reported first by Pay Me in Dividends. So shout out to him. But he basically he had mentioned this in his last video. So I think this would just be kind of, a data point, right? So there's a law firm that's out there, Bornstein, Geritz, and Grossman, investigating potential claim on behalf of purchasers of strategy. Investors who purchase strategy securities are encouraged to obtain, they're basically creating a lawsuit on behalf of strategy shareholders, right? The investigation concerns whether strategy has violated federal security laws. So surprise, surprise there, right? Basically, the details as of right now is on April 7th, Strategy disclosed in a filing with the U.S. Securities and Exchange Commission that it recognized a $5.91 billion unrealized loss on its digital assets for the first quarter of 2025. Basically, that was because Bitcoin was dropping like crazy, right? Which is expected to result in a net loss for the quarter. Strategy further stated that we may not be able to regain profitability in future periods, particularly if we incur significant unrealized losses. All right, basically Bitcoin going down, related to our digital assets. So from that piece of news, right, it spooked the markets. People are like, well, they're going to have to sell, right? And that's kind of the camp I'm in, that, if Bitcoin doesn't go up in price, they still have that tax bill sitting over their head that hasn't been resolved yet. Which now, because the SEC, Paul Atkins, is in the seat, I think that, along with the IRS and the Treasury and Donald Trump's administration, I think that thing's going to really get thrown out. So MSTR will be perfectly fine. So shout out to any Misty holders out there. You guys are absolutely killing it. I have nothing but respect for you guys, because that wild ride is ridiculous. It's almost as close to Tesla, in my opinion. Like, it's just such a crazy volatile ride. But anyways, so there is going to be an active investigation, whether this gets dropped or not. Maybe this is a hit piece or not, or they're really trying to settle something with MSTR, is left to be seen. It's just something I found, something I found through Pay Me in Dividends channel. And then I wanted to take a little closer look about the firm, to understand, kind of the settlements that they reached. And there's some juicy ones in there. All right. So in 2025, they settled for $433 million from Alibaba Group. All right. So that right there is a pretty big one. The last one was $600 million from the Flint water crisis in Michigan. So that was in 2021. That was for $600 million. You have Groupon in here from 2016. Great Wolf results for $93 million in 2012. We have one a little more recent. Let's see, not this one. There's one for Deutsche Bank, 26 million, 20 million from Apple in 2022, because the software in Apple phones basically degraded the iPhone and made it slower. So they won 20 million from that. So I don't know, like, does this company or does this law firm have a pretty good track record? I don't know. but we'll see. We will see if this will actually happen, and this will be, you know, headline news for MSTR or not. This could probably just get thrown out again, you know, based on that filing that MSTR did have. You know, they were talking about Bitcoin going down in price, right? And again, looking at further headwinds, I think the only thing they really have to worry about is Bitcoin staying above, you know, whatever, $90,000 a coin. And not only that, but they also have to worry about that whole tax bill that's supposedly coming due. So we'll see. Just reading the comments real quick before I get into the market recaps. So let's see. Wealthy Life. They have the whole stack, referring to Tesla. Yeah, they do. I know you mentioned they have a data center as well, so I looked into that. Yeah, they have a whole data center for all their AI stuff, which is crazy. Like Tesla really is. They really do everything in house. Like you hit the nail on the head. None of this matters. NVIDIA pricing is not based on Chinese sales. That's exactly my thought too. I saw a comment there. I didn't really confirm it or not, but I saw a comment that like $5.5 billion is not a big deal when you look at NVIDIA's total revenue, and their total revenue is like somewhere in the 200s, I think, you know, is what the comment said. So again, I didn't confirm or look into it, but if that is true, I mean, 5.5 billion is like a write-off. It's like whatever. I wish I could just write off 5.5 billion like it's nothing, like whatever. So yeah, I agree 100% with you. Who is saying this? The Mag 7 are going to be the freaking moon over the next 5 years. So I'm in the camp that Mag 7 is probably going to have muted growth. I don't know. Like when companies get too large and they get way too big, it's hard for them to basically grow, right? You see this with a lot of companies. Realty Income comes to mind, ticker O, you know, because they can't purchase enough properties. What they have to do is purchase other REITs, right? They end up purchasing other REITs, or they start breaking into other markets, right? You see this with Facebook. Facebook, they make a bulk of their money from ad revenue, right? They've tried their hand at doing aerial like internet, you know, way back when. Then they tried, you know, this whole metaverse thing, and to be honest, that's a flop. And they're just trying all these other things. Now they're like doing their AI. Again, when these companies get way too large, they're flush with cash, they have to look for ways to grow their company, grow the balance sheet, you know, deliver shareholder value, all that stuff, right? They run out of things to do. Same thing with, you know, Google. They have like a huge product suite of stuff, right? There's just huge product suite of stuff, from YouTube to their ads, to Gmail, to this, you know, search engine, to freaking analytics, to just everything else that they have under their umbrella. And they have their own AI, they have their deep think and everything else. But again, like it's hard for them to grow shareholder value. So what they end up doing is purchasing other companies. They wanted to break into cybersecurity. So they ended up purchasing a company. I forget the company's name right now, but that company services like Fortune 100 companies, you know, cybersecurity stuff. So they purchased them outright. Instead of building a whole cybersecurity suite of tools, they just purchased another company that already had everything they wanted. And now this is putting them basically in competition with Microsoft. Microsoft, you know, they purchase companies here and there, or they have to kind of change what they're doing in order to, again, continue delivering shareholder value, continue growing their revenues and things like that. So, you know, the whole thing is like innovation, but when they run out of things to do, they have to start buying other companies that already do it or are doing it for them or whatever, right? And then you also have Apple, which they're always late to the game, but they always do the best, right? They're always like their iPhone product, their laptops, everything. It's always a generation behind whoever the innovators are, like Samsung or whatever, you know, laptop brands are out there. But they're always late, but they always do it the best. So now they're breaching into AI. Now they're going to put up what I think a couple like $50 billion for AI stuff. All these other companies are putting up way more. But, you know, Apple's now breaching into AI. And I mean, what are you going to use Apple AI for, right? Like really, like what could you use Apple AI for? It's only in their suite of products. It's not going to be a ChatGPT. It's not going to be like an agentic AI. So again, it's just these companies, when they get too large, they have to look for other things. Like Tesla, look at Tesla as well. Tesla, they have to branch into other things. They have to innovate into other things. First it was cars, then it was electric cars, right? Now it's robotics, self-driving cars, and battery tech and everything else, right? So they have to keep innovating and keep looking for ways to generate income. So it's what happens when these companies get too big, in my opinion, of course. It's what happens when these companies get too big that they have to constantly look for new innovation. They have to constantly look for ways to grow. You know, the Vision Pro for Apple, that was a $3,000 item and it flopped for the most part. Like it was a project in the works for years and it flopped. And I thought the Vision Pro was excellent, but at a price tag of $3,000, I mean, who the hell is going to buy that thing? So just, you know, again, these are just my thoughts on everything. We'll see. One of us will be right. One of the camps will be right in the next 5 years. We'll see what the Mag 7 does. They could trade flat, they could trade negative, or they could moon and probably double or triple, right? Again, we will see. Let's see. John Rambo. Oh man, let's go. Wish I had Sailor's funds to do that. I wish too. Like he's buying so much freaking Bitcoin. It's ridiculous. Yeah, I don't know if Misty's going to come down anymore, man. Sometimes I think like I wish I bought, because I was sitting on like 15,000 in cash, and I was like, I should get Misty at $17. But I was like, no, Misty's so dumb. MSTR so dumb. So it looks like I'm the one that's holding the bag. I'm the clown at this point. So hey, I'm not afraid to admit that. Danos, what's up, man? Hey, welcome back. The only companies who can support and do AI are the Mag 7. That is why they will grow. AI is the key. I agree. No, I agree with you on that point. I think they are the ones. But you see, OpenAI is going to be the biggest competitor to all those guys, because Apple, well, let's take Apple out. It's Microsoft and Google. These two are fighting each other left and right. They're always looking for ways to outdo each other. Meanwhile, you have OpenAI that's kind of been real quiet. They've been in the background. They came out with ChatGPT and it completely took the market by storm, and they're constantly innovating. I want to see OpenAI become a public company. I think that would be freaking crazy. I think they honestly would take a majority of the market share away from Google and Microsoft. Just my opinions, of course. The Mag 7 are the ones who are buying the NVIDIA and AMD chips for a reason. Yeah, I mean, they are. That no doubt about that. But there is a point. Amazon and I think Amazon and Microsoft, they actually are scaling back on their leases for data center space, which is probably going to have an effect on NVIDIA, right? Or this whole AI bubble. So I think that's going to reflect poorly for NVIDIA shares, you know, but Meta, I think it was Meta and Facebook. Well, Meta, Facebook's the same thing. I think it was Meta and who else? Meta and Google, maybe? I think Meta and Google, or Meta and one of the other Mag 7s, they're actually picking up those data center leases because, you know, I think they're really trying to bank on the future. So yeah, I mean, it's going to be interesting. It's absolutely going to be interesting. So John Rambo says, I'm a newbie here, seen a few of your videos, glad I caught you live. Hey, I appreciate it, and welcome to the live, man. And hope you're getting some value from those videos. I do run a Discord, so if you're interested in joining the community just to get some additional learning, talk with other people, check down below in the description, and the Discord chat is there. Available to you, is free, of course. In case you're interested. All right, let's get into the sector updates, and then I'm going to move into the portfolio update. All right, so S&P 500. Oh, let me make that a little bigger for you guys so you're not putting the phone to your face. All right, S&P 500 had a great day. 2.5%. 2.5%. Again, anytime an index moves up or down 1% is a big deal. So moving up 2.5%, that's a really big deal. So hopefully we can keep this momentum. And just really quickly looking at the pre-market, let's see if we can just peep the pre-market real fast. Let's see. Yep, we're still looking green, guys. We're still looking green. All right, so still good there. Nasdaq, we are up 2.63%. All right, big deal there. Nasdaq 100, tech heavy focused ETF. All right, QQQ is the ticker in case you guys are interested. Bitcoin on an absolute tear. $93,000 a coin. All right, 93 freaking dollar or $93,000 a coin. It's just been going up and up and up. And I really think, like I said, the SEC having Paul Atkins as the new boss man, I think that is really what's driving the crypto prices to go up. I know there's all this talk of crypto winter. I wonder if crypto winter is over at this point. I'm not a crypto guy. You guys tell me. Or Bitcoin winter, whatever you want to call it. Maybe Bitcoin winter or crypto winter was never really a thing. Again, if we look at the 1 month, we had that really, really nasty drop, right? April 9th, we had that really, really nasty drop. That would have been the best time to buy msty right there. But we had that really nasty drop. And, you know, this, are we going to go back to $77,000 a coin or $50,000 a coin? I have no idea. I hope we go back down and head to lower 70s and definitely probably lower 60s, just so I could rub it in CKK's face, because he's a shareholder of msty and he's doing really well and he's rubbing that in my face. He's a member of the Discord, so just so you guys know. So, you know, I just like to be petty and spiteful, but no, for real. I hope it continues going up. You know, anyone who's holding Bitcoin for the long term, you guys are going to do well. All right, Bitcoin is over long periods of time going to have a really nice return. So if you want to make income on top of that, then a msty play might be good. But again, just keep in mind that msty is tied to MSTR. You have to understand MSTR's risk, all right, and what, you know, kind of headwinds they might have. If it's nothing but green skies ahead for MSTR and no problems, no issues, and people are going to continue pumping up the stock, you know, through BMAX offerings or convertible debt or, you know, strike preferred shares or whatever the other shares are called. If you're bullish on that, then hey, go with msty. I think, you know, it could have a lot of room to grow as long as Bitcoin has a lot of room to grow. For gold, which is kind of strange, had a lot of outflows. So we saw this happen, you know, not too long ago. April 2nd to April 8th, there's a huge outflow there, right? And it's because that was around the time when, you know, there was a rumor that there was a 90-day pause. So everyone flocked out of gold, got back into the equities. And then, you know, like, no, that was actually not true. And then everyone flocked back to gold. And then the news came out, hey, we're putting a pause on 90 days or a 90-day pause on tariff. So now it looks like people are getting out of equities. Again, people flock to gold as inflation hedges, as hedges against recessions, as hedges against currency devaluing. So maybe this is the market just telling us that, hey, it's a little safe right now. We're taking some chips off the table. Again, gold is at all-time highs. So maybe we're just taking some chips off the table and putting them into equities, buying, you know, shares that are, you know, really low in price right now because the stock market is pretty beat up. U.S. 10-year Treasury, which we use as a weather gauge for basically real estate and real estate mortgages. Looks like it's come down just a little bit, not too much. Again, we keep having these wild swings in treasuries, and I still am of the camp and of the belief that the 10-year Treasury is the bigger story in the finance world. If this thing doesn't come down, this will be a nail in the coffin for a recession. All right, I'm still in that camp. I still believe that we have to get this down. This comes up all the time whenever they're talking about the economy. This always comes up, is the 10-year Treasury. It's not just the federal funds rate. It's not just the Federal Reserve lowering interest rates, right? This also plays a huge role in debt refinancing, and you still have, I think, like $1 trillion worth of mortgages that are coming due this year. And if that tidal wave happens and they can't refinance because interest rates are too damn high, then there will be a real estate collapse. There will be so many banks that are struggling to offload all this real estate that they had to seize from investors or seize from owners because they couldn't get out of, you know, either fixed debt or bridge debt or adjustable loans, whatever. So, you know, they call them ARMs, adjustable rate mortgages. So if they can't get out of that because the rates are too damn high, I think that tidal wave is going to turn into a tsunami, and that will be horrible for REITs. That'll be horrible for real estate. That'll be horrible just for the economy in general. So real VNQ, which is a Vanguard Real Estate Index Fund ETF, we use this as a barometer just for REITs. Looks like they had a green day, and it looks like they're actually trending up even more. So I'm very grateful for that because my REIT portfolio was hammered pretty hard, and I'm glad it's starting to trend back into the right direction. Again, we had a huge sell-off around the same time with the whole tariff stuff, tariff announcement, Liberation Day, all that stuff. We had a huge sell-off, but it looks like we've been steadily recovering. So anyone who's been thinking about getting into NYSE's IYRI, definitely would have been a great opportunity around this period. And I know yieldmax just came out with their own version of that. They call it RTNY, which is a real estate cover call ETF. So I don't know. Whenever it comes to yieldmax, I'm very iffy about them. I do trust NEOS a lot better. So I think NEOS would have a better, probably a better fund, but we'll see. We'll see, because these new funds that yieldmax is coming out with, they actually hold the underlying stock. They're not just a bunch of synthetics. So don't ask me what any of that means. But I do know that if an ETF holds the underliers and if they actually own the stocks, then that is better for that ETF. And it shouldn't face NAV erosion, which is, whether you believe it or not, that's entirely up to you. I believe in NAV erosion. I think that is a poison on an ETF. And if you hold an ETF that has NAV erosion, you're basically erasing your capital. The whole idea of total return, you can use that argument, and I can see where that argument has merit. But again, I don't want to put money only for it to erode in value. All right. I don't care about ROI. I don't care about, oh, you're going to get paid your money back and everything after that's free money once you get your return on investment. It's like owning real estate. No, it's not. So anyways, I'll digress from that. Let's see. Just checking the comments before we get into the portfolio update. Let's see. It's a Wealthy Life says Tesla will take the chips. They are spending another $10 billion this year on CapEx. I hope they take the NVIDIA chips. I need NVIDIA to freaking pop, man. I need them to get back up to all-time highs. Let's see. Latro, hey, welcome back, man. Portfolio ended 7.5% today. We are up 9% at the peak. That's what I'm talking about. Let's get that money. Let's get that money. All right. Plenty of other Bitcoin plays out there other than that MSTR. I agree 100%, Sauce Maker. You have other things out there. I really like the one from Roundhill. YBTC, I think it's, or is it Ybit? I forget. Ybit. Let's see. Yeah, this is the yield. This is the one that's garbage. This is the trash one. Like, why can't yieldmax do to Bitcoin what they do for MSTR? Like, I don't understand that. Why they can't just do that? Because MSTR almost trades 1-for-1 with Bitcoin anyways. So I don't know why they can't just do that for MST or for Bitcoin. But I digress. I'm not a fund manager. I'm just some dude on YouTube. All right, YBTC. Yeah, this is the one that if I was gonna invest into like a Bitcoin cover call ETF and I had to choose between yieldmax or Roundhill, I would go with Roundhill 100%. Because, I mean, simply put, you can look at the max, right? A little bumpy, obviously bumpy. And this one still fairly new. You have about a year, right? But if we look at Ybit ETF, and if we look at the year, I mean, you tell me, you guys come to your own conclusions there. All right. There's the argument that, if you take your money and reinvest it back into the ETF, your NAV will be protected. I'm not trying to protect the NAV. That shouldn't be my job. That's your job. That's the ETF manager's job, is to protect the NAV. All right. I collect dividends. All right. I'm the one that gets paid for investing in your ETF. So that's just, again, my thoughts on when it comes to yieldmax. I am involved in yieldmax's cepi, which is their semiconductor fund. I do have high hopes that their new funds, GPTY, cepi, RTNY, that these funds will turn, turn their perception around, right? Because hopefully they don't suffer the same NAV erosion that a lot of their other ETFs go through. So we'll see. We will see. We'll leave that to be seen. Latro says, can't refinance real estate because the home values have fallen. We're down 25% off the 2022 peak in Austin. Man, dude. Yeah, I have a sour point for Texas right now. But yeah, Texas has been hammered, like absolutely shitted on when it comes to real estate. Insurance went up, home values went down. Now there's like all this, kind of population movements happening, like Austin, Houston, Dallas. Like these markets have been hit so bad. And then you have rents. I think the rents have been declining as well in these areas. So man, yeah, Austin has been getting like Texas in general has been getting. Excuse me. Man, I've been talking so much. I won't shut up. I got to drink some coffee. Anyways, like I was saying, Texas has been hit hard. So real quick before the portfolio update, I did put out a poll there. So we have just going to go over the poll real fast. The poll was, are you used to 2% to 4% price swings on an index at this point, right? And that is basically taking some inspiration from Alex, because he had mentioned, who's on the stream or joins the stream. He had mentioned that at this point, he's pretty much used to it. So I was like, that's a good question. For yes, we have 60% of the audience voting yes, and then 40% voting no. And I'm going to vote no on this one. I am still not used to this. All right. I can't stomach this, this kind of volatility, especially with an index. Yes, it doesn't drop as much or as fast as like individual stocks do, or grow as fast as individual stocks will. But still, like when you have a sizable amount of money in a freaking index fund or something that tracks an index fund, a 2 to 4% drop makes a huge difference, and it hurts. It definitely hurts. All right. It's a Wealthy Life had asked 50% drop. What is the yield on that? I forget. I think it's like in the 50s, 50 to 60% for distribution rates. Latro says NAV is after tax funds. Dividends are pre-tax. Watch out for NAV being paid out as a taxable div. Exactly. You hit the nail right on the head. All right, let's hop into the portfolio updates. And I know this video is going a little longer than usual, so I apologize. We're already at the top of the hour, so I'm going to try to make this quick for you guys. So this is the portfolio sitting at 71,000. Earlier, in the week, I was like at 62, I think, or 63,000. So that caused me to sell out of PLTW. All right. So I want to just cover this briefly, because I was getting a lot of comments about, if I'm not bullish on Palantir anymore, or not bullish on PLTW or whatever. Right. I am still very bullish on Palantir. I still believe in Palantir, and I am still going to continue investing in PLTW. I just had to flock to safety because I don't want this portfolio imploding on itself. You guys can see it for yourself that I am heavily margin, right? Or heavily leveraged right now. This at one point was, I think, like 16,000 or 12,000. It was between one or the other. And when you have something like an index dropping a lot and the entire market taking a dump, it causes you to second guess yourself. And it causes you to worry, because if I was to hit a margin call, I'd have to sell out of things, especially at a loss. PLTW was doing very well. All right. It was actually the only ETF I held that broke even. Right. So I looked at that and I was like, you know what? Let me just take it off the table for now, and I can reallocate it back to later. Yes, I might be buying in at a higher high, which will suck. But I also need to think about the greater good. I have to think about the freaking portfolio. This thing keeps me up at night. Margin, right? I was talking with Pay Me in Dividends and a couple other friends of mine, and margin really does keep you up at night, because you're not sure if, call him the orange man or the man in the White House, if he's going to flip the script and we're going to have another 10% decline on the S&P 500. So that kind of stuff keeps you awake at night. And I was trying to be as objective and logical in this decision as possible. Of course, if I held PLTW right now, I'd be up, probably like $2,000, right? It would have been nice. But again, I have to look at the totality of everything. I have to look at the entire portfolio. I don't want to be margin called, and I don't want to have to lose shares at a substantial discount just to pay off, a deficit. I'd rather just hold the cash for now, and I could redeploy it. I could put it into NVW right now if I really wanted to, or put it into cepi, but again, I'm not going to, because I still really believe in Palantir, and I'm still going to get back in. And I still think there's a lot of room to grow for Palantir. If you're buying in at $100, I know there's people putting out arbitrary price targets, 100, 110, 115, 120, 25. I mean, I don't know. They're arbitrary. They're just made up. They're pulled out of the butt, right? I think Palantir could ride easily much higher if it's adopted worldwide by militaries, defense contracts, U.S. governments, U.S. government, U.S. military. Not only that, but foreign, governments start adopting this stuff. I mean, look at Microsoft. Microsoft Windows is used worldwide. Okay, it's used all over the world. So I think Palantir, if it breaks into more markets, if it breaks in and is used by more militaries or other governments, not just governments or militaries, but other commercial enterprises, in the European Union, in India, in, wherever else, Canada, Mexico, maybe China, right? If it's adopted more and more outside of the United States, it's just going to have a lot more room to grow. So even if I get in at $100, I think I'll still have a lot more room to grow. And again, I'm not buying Palantir PLTW for an appreciation play. While that's icing on the cake, I'm buying it for income. I'm buying it for a dividend payment. So that is why I would buy PLTW again, even if it is at a little higher price, right? Yes, I'm sacrificing a little bit of the capital gain, but I'm saving the portfolio from basically imploding on itself, and I'm saving a heartache and very bad emotions. But I'm not really sacrificing all that much in terms of capital gains. I can still collect dividend income in the future. Yes, I would buy in and probably have lower shares, but again, I can sleep well at night knowing that I'm not going to wake up and it's going to be bloody red, and then I'm going to get hit with, hey, you owe us some money, so we're going to sell some shares. So that is really just my whole point about PLTW. I did purchase 14 shares of cepi yesterday, today, Eastern Standard Time. So I did purchase some additional shares of cepi. Again, I'm really bullish on semiconductors. I didn't want to choose the semiconductors, and I was looking for a semiconductor fund that could pay income, but Roundhill doesn't have one, Kurv doesn't have one, nyse doesn't have one. I'm not touching Defiance. So yieldmax was the only one so far that has a semiconductor ETF that does cover calls. So I decided to go with cepi because of that, but also because I'm very bullish on the sector as a whole. I think semiconductors are going to have a lot of room to grow. Right now, they've been obviously pressured because of the tariffs and everything else. But if you look at the holdings for cepi, out of the holdings, I think there's only 3 companies that are international. That's Taiwan Semiconductors, that's ASML, and I forget the last one. But there's only 3 of them. The rest are all US-based companies. So I'm betting on the US. I'm not betting against the US. And even then, TSMC has already moved their manufacturing to the United States. I want to see if ASML might. ASML basically cornered the market with their technology. It's like fabrication. I forget what kind of fabrication it is, but they basically cornered the market. If they were to bring their manufacturing to the United States, then it's good game at that point. The United States owns the whole market for manufacturing semiconductors. So again, just my thoughts on everything. So anyways, that is that for this portfolio update and why I had to sell out of PLTW. Again, I'm still very bullish on Palantir, still very bullish on the semiconductors, and I don't plan to sell out of cepi at any point right now. And I collected like about a $28, $29 dividend from them so far. So we'll see how it continues to perform in these next couple of weeks. Again, this is a weekly payer, by the way, for those who might be wondering. So let's check the M1 Finance portfolio. Got to log in here. Forgot to end the poll. Let's see what happened. All right, there we go. All right, so this is the portfolio on M1 Finance. This is a combination of REITs and a tech-focused ETF and a couple BDCs in there. So actually been doing very well. REITs trending in the right direction. Really happy about that because, again, we were getting hammered. There was no asset class that was safe. Everything was trending down at one point. REITs are recovering again. They've been in a very long bull market, or not bull market, bear market. They've been in a bear market for about almost 3 years now. So very hopeful that this year they will rebound as the 10-year goes down, as the interest rates go down, continue going down. I think we will have a massive rally probably later second half of this year, 2026, some REIT analysts are expecting that there will be the biggest rally in 2026. Of course, that year keeps changing, the needle keeps moving, but I don't know. I like what I'm seeing right now in the markets, and I like that REITs are slowly recovering. You can see it just by looking at like VNQ. They've been recovering very slowly. Aside from this small dip, like if you look here, they've kind of just been going up. It's just been trending up. This was, from September of last year. We had all the highs, and then it just kept going lower because the 10-year treasury kept going higher. So it looks like we're doing pretty good, and then all this tariff talk. So I'm very hopeful for REITs to rebound, and meanwhile, while I wait, they'll just keep paying out the dividend, etc. VGT, technology ETF from Vanguard, this one's been hit the hardest. Again, I bought at all-time highs. I should have dollar cost average, or I should have lump summed. Didn't know that the market was going to crash, but yeah, this has been my biggest loser out of the entire portfolio. So this has been the biggest loser so far, but again, it's an ETF, holds like 300 companies. I don't have to pick and choose. It's all done for me, so I just got to basically wait and sit on it. So this ETF, in theory, can't go to zero, so I'm not worried about it. I'll just hold it and continue to hold it for the foreseeable future. And then, we have IBIT down here. Looks like it's on a recovery, and some BDCs. If anyone's looking for a BDC to get into, I really like Blackstone right now. Blackstone is probably at a decent price in my opinion. So if anyone's looking for a BDC to take a look at, I would recommend Blackstone Lending. All right. They obviously are an arm of Blackstone, which is a huge asset manager. Think of someone like BlackRock, right? There's Blackstone, there's Starwood. Blackstone Secured Lending is a BDC. They basically loan out to companies that can't get traditional financing. So that'll do it for this stream, guys. My voice is completely cracked. I think I ran out of voice. So I hope you guys enjoyed the stream. I hope you guys got a lot of value from it. Again, if you haven't already done so, appreciate it if you hit that like button. Let the algorithm know that I'm here. I am going to get ready and get back into the gym because I took about 2 weeks off because I messed up my back. But back is healed now, so I'm going to get right back into it. So I hope you guys enjoyed the stream. Of course, massive appreciation to you guys, because without you guys, the stream would probably be not even here, right? I wouldn't even be doing a stream. So again, I really do appreciate you guys joining me in or joining in on the stream. And with that being said, I will see you guys in the next stream. You guys have a great evening, a great rest of your day, wherever you are in the world. I will see you in the next one. Take care.